When people hear the name Elon Musk, they usually imagine bold technology, electric cars dominating highways, rockets landing vertically on ocean platforms, artificial intelligence reshaping industries, and even humans becoming a multi-planet species. But none of these ideas could exist without one invisible force working constantly in the background: finance. Ideas do not change the world by themselves. They need capital, risk tolerance, and people willing to bet on an uncertain future. Elon Musk understands this reality better than most entrepreneurs. He is not only a visionary engineer, but also someone who deeply understands how money works, how investors think, and how to keep funding alive even during near failure. Creating and scaling companies like Tesla, SpaceX, Starlink, Neuralink, xAI, and X requires tens of billions of dollars over many years. What separates Musk from others is not just the size of the funding, but the way he earns trust, maintains control, and continuously reinvests into long-term goals. Elon Musk's financial transformation began after the PayPal acquisition. When eBay bought PayPal, Musk received around $180 million after taxes. This moment gave him financial freedom, but also placed him at a crossroads. Most entrepreneurs diversify, protect wealth, and minimize risk after such a payout. Musk did the opposite. He concentrated risk. He poured nearly all of his personal wealth into ventures that many experts openly mocked. Private spaceflight was considered unrealistic. Electric cars were viewed as slow, expensive, and unattractive. Clean energy was seen as unreliable and unprofitable. By choosing to fund these ideas personally, Musk demonstrated something rare in business. He believed in the mission before the market did. That belief came at a huge cost. During the financial crisis, both Tesla and SpaceX were burning cash rapidly. Investors were hesitant, launches failed, and production problems piled up. Musk later admitted there was a point where he was choosing which company might survive. Instead of saving himself, he split his remaining money between them. This willingness to risk everything became a defining trait that still influences how investors view him today. Another critical part of Musk's financing strategy is how he treats personal compensation. Traditional CEOs rely on high salaries, stock grants, and guaranteed bonuses. Musk rejects this model almost entirely. At Tesla, his base salary was $0, no guaranteed income, no safety net. Instead, Musk structured compensation around performance. He only earns wealth if the company reaches extreme milestones in valuation, revenue, and execution. If Tesla underperforms, he earns nothing. This approach sends a powerful message. It tells investors that Musk is not extracting value from the company, he is creating it. Every dollar stays inside the business, fueling growth rather than executive pay. It also aligns Musk's incentives perfectly with shareholders. Few CEOs in history have tied their personal wealth so tightly to company performance. Tesla's public listing became one of Musk's most powerful financial tools. As investor confidence grew, Tesla's stock price surged. Instead of treating this as a paper gain, Musk used it strategically. Tesla raised capital through share offerings and convertible debt when valuations were high. These moves allowed the company to raise billions while minimizing long-term dilution. Timing was everything. The capital raised funded gigafactories, global expansion, battery innovation, self-driving software, artificial intelligence, and manufacturing automation. Tesla essentially converted market optimism into physical infrastructure. Rather than fearing Wall Street, Musk learned how to use it. Not all Musk companies follow this public market model. SpaceX, Starlink, Neuralink, and xAI remain private, which gives Musk far more flexibility. Private funding allows these companies to focus on long-term innovation without quarterly earnings pressure. Investors in these firms understand that returns may take years or even decades. SpaceX is the clearest example. It has raised billions from private investors while staying under Musk's control. This structure enables massive investments in reusable rockets, satellite networks, and deep space missions, projects that would be extremely difficult to justify in a public company environment. By choosing privacy strategically, Musk protects long-term vision over short-term profit. Government partnerships are another essential pillar of Musk's financial strategy. This is often misunderstood as government support, but in reality, these are performance-based contracts. SpaceX earns revenue by delivering results for NASA and the U.S. Department of Defense. Cargo missions, astronaut transport, and satellite launches provide steady income while validating SpaceX's technology at the highest level. Tesla benefits indirectly from government policies that encourage clean energy adoption. EV tax credits and emissions regulations increase demand without direct government ownership or control. In many cases, Musk's companies deliver better results at lower costs than traditional competitors, creating mutual benefit. Debt plays a role, but it is handled carefully. Early Tesla loans were repaid ahead of schedule, which helped build credibility. This early repayment shifted Tesla's image from a risky startup to a serious industrial player. On a personal level, Musk frequently borrows against his stock holdings instead of selling them. This allows him to access liquidity while avoiding massive tax obligations and preserving ownership. Selling shares would weaken control and signal reduced confidence. Loans provide flexibility without sacrifice. Profit reinvestment is another defining trait. Tesla does not pay dividends. Instead of rewarding shareholders with short-term cash, profits are reinvested into expansion and innovation. Factories, AI systems, robotics, battery research, and autonomous driving all require enormous capital. Musk believes growth compounds faster than payouts. This philosophy aligns with investors who prioritize long-term value creation. Musk's public persona also plays a role in financing. His visibility keeps his companies constantly in global conversation. While controversial at times, this attention sustains brand relevance and investor engagement. Few leaders can influence markets simply by speaking. Musk's presence alone can attract capital, talent, and media coverage at a scale most companies cannot buy. Risk tolerance defines Musk's leadership. Reusable rockets, mass EV adoption, self-driving technology, brain-computer interfaces, and artificial intelligence were all dismissed as unrealistic at various points. Musk accepts risk openly. Investors who support him understand volatility is inevitable, but they also understand the potential upside. This shared mindset allows Musk to fund ideas that traditional CEOs would never attempt. Control is critical to all of this. Musk structures ownership and voting power to protect decision-making authority. This control allows him to push through resistance, ignore short-term criticism, and focus on missions that span decades. Without control, innovation at this scale would be impossible. Musk's companies also operate as an interconnected ecosystem. Tesla strengthens Musk's financial position. SpaceX enables Starlink. AI research flows across multiple ventures. Success in one area supports investment in another. This ecosystem approach maximizes efficiency and minimizes dependency on any single revenue stream. The acquisition of X demonstrated a different financial strategy. Funded through personal equity, loans, and outside investors, the deal focused less on immediate profit and more on influence, data, and long-term strategic value. Musk sees X as a foundation for future AI systems, information distribution, and public discourse. Once again, short-term losses are accepted in exchange for long-term positioning. In the end, Elon Musk finances his companies through a rare combination of personal risk, performance-based compensation, public and private capital, government contracts, strategic debt, reinvestment, control, and long-term belief.
He doesn't just ask people to invest money, he asks them to invest in a future that does not yet exist. That belief, more than any single dollar, is the true engine behind Elon Musk's financial empire.